The usual disclaimers before we start that today's sharing is for information purposes only and should not be taken to be financial advice. We have an upcoming Ask SIAS, so if you'd like to ask Sunny, myself, as well as Ben questions, you can register via this QR code, and the registration will close on the 20th of May on Tuesday. If you find the weekly market review helpful, do leave us a review on Google. And if you are keen to join SIAS as a member, you can go to this website, sias.org.sg/membership, or scan the QR code here. As a SIAS member, you can access various online resources as well as investor education programs. So what did we see in the market over the past week? For investors in the US market, you might be delighted to hear that we saw a very strong bounce in the S&P 500 with a 5.3% gain in the past week, now back to close to the 6,000 point mark, closing at 5,958 points. The gains were largely led by the tech stocks. So we saw the NASDAQ with the 7.2% gain, closing above 19,000 points at 19,211. Closer to home, the STI was also lifted by the positive sentiment, now reaching close to the 3,900 points with a 0.6% gain in the past week. So the positive sentiment is really driven by increased optimism after the US-China trade deal, where we see a pause in the tariff for 90 days. So we are back to a 10% tariff as well as a 30% tariff between US as well as Chinese goods. So definitely a positive outcome for the meeting between the US as well as China officials, with the 90-day pause providing more time for both sides to be able to negotiate a positive trade deal and avert some of the repercussions that were previously feared. So we see here an easing of the trade policy uncertainty. Recall earlier we had shared that the trade policy uncertainty actually bounced to a very high level after the initial trade tariff were announced. So this is the bounce that we saw in the early part of March. We saw actually a further increase in April after the actual tariffs were announced. And that has actually eased over the past month as investors actually gain more confidence that there might actually be some bilateral deals that would be announced between US as well as its various trade partners. So the latest US-China announcement further reinforced the idea that maybe some of the initial concerns around the trade tariffs might actually be overblown. The other positive news that came out in the past week was actually the US inflation data. So we had the US Consumer Price Index data that came out last week. And what we saw here for the April data is actually a further easing from March. The US Consumer Price Index rose by 2.3% year on year in the month of April, easing from a 2.4% increase in the month of March. So despite all the concerns that the inflation might actually go up with the trade tariffs that were announced, actually we did not see such an impact in the month of April. In fact, it actually eased from the month of March. So that actually helped investors to once again be more confident around the fact that we might actually not see inflation going up to levels where it was in the past few years. So with that, we see the latest likelihood of Fed rate cuts. If you had followed our weekly market review in previous weeks, we mentioned that the previous expectation was actually for 3 rate cuts in the remaining of 2025. When I check the latest data, this is what I see, potentially 1 further rate cut in September and 1 more in December, which would bring the total number of rate cuts this year to 2 rate cuts. Okay, so because we are not actually seeing that we have a very sharp economic slowdown, so that effectively give the Fed more time to be able to evaluate a lot around what will happen with the tariff, and as a result, investors are just now expecting 2 rate cuts this year. Okay, so I mentioned earlier that the Singapore market saw a slight bounce with the improved sentiment, and some of the stocks that we see here were some of the stocks that were sold down quite significantly because of concern around the trade tariffs. So we've got Yangtze Shipbuilding with a 3.8% gain, Hong Kong Land, which is exposed to China property, with a 3.2% gain, Mapletree Logistics Trust, because of the concerns around its China exposure, as well as the logistics exposure, up by 2.8%. Sets 2.7% because of concerns around the exposure in the cargo business actually easing. And then for Venture Corp, actually with a 2.5% gain. So we saw some of the names that were previously sold down actually having a bounce in the past week. In terms of the worst performers, these were effectively names that investors were hiding in as the safe place to hide with the trade uncertainty. So we saw ST Engineering actually having a bit of a correction, as it was one of the names that investors were hiding in because of the trade tensions, and likewise Fraser Centrepoint Trust down by 3.5%. The name that I wanted to go a bit more in depth today is Singapore Airlines, which reported its earnings last week. We see here, likewise, SIA share price was sold down close to $6 following the announcement of the trade tariff, but has actually recovered, now back to about 690, and the sentiment continued to improve with the announcement of its latest earnings. Okay, so this is what we see for SIA's full year results. The company has a year end with March. So effectively, this is for the 12 months ending March 2025. Okay, so what we see here is for the revenue, it managed to grow the revenue in both the second half of fiscal year 2425 as well as for the full year 2425. Okay, but because the expenditure rose at a faster pace, which is why we see the operating profit being weaker, both in the full year 2425 as well as in the second half of 2425. The net profit was boosted by an exceptional gain. So I think what many investors will be focusing on in terms of the underlying performance would be the operating profit number. Okay, so what we see here would be the quarterly breakdown around the net profit. And what we see here is that in Q4, the group net profit was actually at 410 million. It has weakened slightly from the group net profit on an underlying basis in Q3, but that is expected because the fiscal year Q3, which is the quarter ending December, is usually the stronger period. Okay, so what we see here is that even though the group net profit moderated, it did not decline as much as what some investors may be expecting, which is why most analysts actually saw the results as being a positive one. Okay, so this is what we see for the group revenue. We saw in Q3 that the company reported a record quarterly revenue of 5.2 billion, but even with the seasonally weaker Q4 fiscal year 2425, the decline was actually not as bad as what some investors actually feared, and it was still at 4.8 billion, which represents a year-on-year increase. So with that, the group revenue of SIA actually grew by 2% in the second half to 192 million. Okay, so this is what we see for the group operating statistics. In terms of the passenger load factor, it was at 86.4% in Q4 fiscal year 2425, which is relatively unchanged from Q4 fiscal year 2324. Okay, so the load factor of SIA remains fairly healthy, and that's helped to boost the revenue of SIA. The other positive would be the cargo business. If I were to look at the operating statistics, so once again, in terms of the cargo yield in the fiscal year Q4 2425, it remained fairly healthy at 35 cents. So that is relatively unchanged compared to what we saw in Q4 fiscal year 2324. Okay, so as a result, we saw that the entire fiscal year 2425, the entire cargo load factor was actually an increase of 1.6 percentage points. I mentioned earlier that we saw an increase in SIA's group revenue. An increase in SIA's group expenditure. So this is what we see here in that for the whole of fiscal year 2425, the expenditure rose by 9.5% year on year. And if I was to look at the second half fiscal year 2425, the group expenditure increased by 5.2%. So with the group expenditure increase actually exceeding the group revenue increase, that actually explained the fall in group operating profit for SIA. Okay, so overall, this is what we see for the earnings per share for the full year fiscal year 2425. It was at 89.3 cents. What actually surprised investors positively was actually the final dividend per share, which was at 30 cents. And with the interim dividend of 10 cents, that will bring the total dividend per share for SIA for the entire fiscal year to 40 cents. Okay, so given the basic earnings per share of about 89.3 cents, that would represent a payout ratio of below 50%. Okay, so given the share price that we see for SIA as well as the total dividend per share of 40 cents, that represents a dividend yield of close to 5.8%. So that still remains above the historical average dividend yield of SIA, which is at 4.7%. Okay, so because the earnings decline has not been as bad as feared, the company has been able to still pay a decent final dividend of 30 cents, and that will bring the total dividend to 40 cents, and that makes the dividend yield of SIA still looks relatively high compared to the historical average. So SIA was one of the key results that investors were looking out for in the past week. Going into this week, I think what many investors would be looking out for would be the earnings release. We have actually SETS reporting the earnings on Friday, 23rd of May. We also have a 6-month Singapore T-bill auction on the 22nd of May. So those are some of the things that investors will keep a lookout for. Okay, so with that, I'll hand over to Sunny, who will share the technical analysis.
Okay, thanks, Gerald, for the updates on the Singapore market and the SIA earning. So last week, STI had a shorter trading week because of the Visa Day holiday. And you can see that on last Tuesday, we have that spike up on the STI index, reaching a high of 3,956 points due to the positive development in the trade talks between US and China that lead to a 90-day tax break or tariff breaks for the tariff that was announced earlier by the US. But then subsequently, that optimism actually wear off, and STI actually sort of a pullback to the lower level again. Okay, so we ended the week around the 3,880 point level. So for the week, it is still a positive week, up 5%, and this is the second consecutive positive week for the STI index. Previous week it was up 0.8%, so 0.5%. So that's 2 consecutive winning week, and we are saying that the STI has breached quite a lot of prominent moving average level, with the 100 days moving average now at 3829. So we are now above that level. And the next resistance level we are looking at for the STI index, firstly, would be the upper bound of that Bollinger Band, now at 3,927 points. And above this level, this mini double top that we talked about last week at 3,949 points, that will be the key level to watch on the 3,950 level. And if we, let's say, we breach this level, then only the all-time high at 4,005 points will be the final resistance level for the STI index in the near term. Looking at the indicators of the STI index, we can also see that the MACD trajectory is still on an incline. So So it's still positive, although you can see that at least in the past 3 weeks, that positive momentum, that rebound from the April bottom period has starting to subside and has started to lose momentum. So that means the push towards the higher resistance level will be more challenging going forward, but nonetheless, there is still positive momentum, just that there is no longer the extraordinary push that we saw in the middle of April. So the RSI index is now at 58 points. It's also slightly lower than last Friday reading of 61 points. So that is a continuation of the subsiding of the momentum reading on the RSI indicator as well, and that confirms the MACD indicator. So in the near term, there seems like there may not be any positive catalyst, given that last week we also hear the CPI index from the US still manageable and still in check. And over the weekend, we hear that the US credit rating by Moody's was also downgraded, thereby highlighting a higher deficit risk. So these are all sort of a negative news flow coming through over the weekend. Hence, STI is not surprised to see that STI on a Monday morning is starting to pull back a little bit from last week high. Okay, so going forward, I think it will still be a range-bound movement in the STI index, given that most of the optimism has already been priced in from the tax break that was given by US to China. So in the next few weeks, I think that we are going to be sort of a range bound captured by the high of the Bollinger Band at 3927, with the lower bound of the Bollinger Band at 3751, giving the support to the STI index should it touch this level. Okay. Next, let me move to the US indices. So US indices came off a very good winning week. So the Dow Jones is up 3%, S&P up 5%, and the NASDAQ Composite Index up 7% for the week as a whole. So we can see that the NASDAQ Composite Index also have a very big jump. But let me touch on the 30 stocks, the Dow Jones Index first. So the positive thing that we want to take note on the Dow Jones Index is, yes, we talked about the major resistance level, the red line that you see here, which is the long-term 200 days moving average. So actually on Friday, we have already breached and crossed above that level. So that means that the near-term uncertainty of the trade tariffs is on hold for now, at least until the July and August period, where the 90 days tax break sort of expire, and then we may see the selling pressure starts to come in again. Okay, so on the Dow Jones Index, where are the key levels that we should be looking at? So now at the 42,654 points for the Dow Jones Index, the next resistance level, I think there is a bit of a seller coming in here at the end of December. That is around the 43,325 points level. So that is the first resistance level, which may also find confluence with the upper bound of the Bollinger Band at 43,133 points. So that will be the immediate first resistance level for the Dow Jones Index. Okay, if we breach higher, then definitely I think there's a good chance that we will go to this is the November high at 44,486 points for the Dow Jones Index. On the support level, we can see that the short-term moving average, which is the green line, 20 days moving average, is slightly going to cut above the 50 days moving average, which is the medium-term moving average. So this could signal, if a crossover happen, it could signal a short-term bullish uptrend for the Dow Jones Index to sort of breach higher above the 43,000 level, and hence get support, sort of consolidate around the 43,000 level. Okay. So on the MACD indicator, we can see that we still see very strong upside trajectory from both the MACD and the signal line, thereby signaling us that, hey, the uptrend momentum that we are seeing in April is unlikely going to end anytime soon. So it's likely going to continue, even though we noted that over the weekend, we saw the downgrade of US credit rating. So that could sort of dampen the upside momentum or the trajectory of the MACD line this week. But nonetheless, I don't think it is going to go cross below the 0-point neutral mark. Hence, it is still a neutral to positive reading for the Dow Jones Index, according to the MACD indicator. On the RSI, it seems to be painting the same story, the reading at 63, meaning we still have some headroom before we touch the 70-point overbought level, and hence there could still be a bit more upside on the Dow Jones index. Okay, so that means that there's still positive momentum, and I'm looking for the Dow Jones index to test the higher level of 43,300 points, with support coming in around the January low at around 41,844 points. So this is the range that we are looking at for the Dow Jones index to be moving in. Next, let's move to the broad index S&P 500. So S&P 500 actually has already crossed the 200-day moving average last week, and hence it is sort of on its way to sort of get back in touch with its all-time high at 6,147 points that was set in February this year. So now the latest reading at 5,958 points is just about 50 points below the 6,000 psychological handle. And if you break this level, then 6,001 would likely be the target that we are looking at for the S&P 500. We have also noted that we have turned positive for the year. So that is a good thing. That means we have recovered from most of the tariff fear that we saw in April. So according to the MACD indicator, it is still a uptrend indication. So it indicates that the uptrend is likely to continue, although there is some kind of a weakness in the uptrend momentum in the last two trading sessions. The RSI at 69-point reading is also close to the 70-point overbought mark. Hence, we need to be careful here. So I believe the 6,000 mark will likely be the key level that we are looking at for the S&P 500. And hopefully it will consolidate there. But as of now, there is no indication that MACD is going to turn negative. Hence, the uptrend is still intact. But then there is definitely indication that the uptrend is likely to slow down this week, and hence consolidating around the 6,000 point level if the RSI move up into the 70 point, which is the oversold level and overbought level, and that could attract some technical sellers coming in. Lastly, let's move to the NASDAQ Composite Index. So the tech index is one of the major sector that sort of rebounded the most since the reprieve of the tariff was announced. So we are now at 19,211 points. The next resistance level, which I don't see very clearly that if there's any resistance level, because this was the level that we saw in November, 19,318 points. So that could be the cap, with the upper bound of the Bollinger Band at 19,578 points. So around this level, likely we may see some resistance level on the NASDAQ Composite Index. Okay. So the MACD indicator is still positive. So uptrend momentum still intact, but there is some subsiding of the momentum in the last two trading sessions. So do be careful. I think if, let's say, the NASDAQ Composite Index touch the upper bound of the Bollinger Band at 19,578 points, that could be a level that investors or technical sellers might come in to sort of take profit or sell down the NASDAQ Composite Index in the near term. The RSI has also touched the 70-point overbought level. Hence, any upside trajectory or momentum going upwards will hit a lot of resistance, even though in the past we do see that the NASDAQ Composite Index has hit the 80-point RSI reading before. But I think in this current environment, it's good to be prudent. So if RSI were to sort of go up further, then it could be an indication that the change in direction of the NASDAQ Composite Index might be around the 19,578 points level. So do watch out for that level. And these are all the updates that I have for today. So thank you for joining us for this weekly market review, and we'll see you next week in the next weekly market review on Monday, same time, same place. Goodbye.